All right. Hello, traders. Welcome to Trading Trail. Day is January 8th. We're on the fifth day of the stock market this year. Year's 2025. And boy, oh boy, did I make some pretty silly rookie mistakes. Today is a prime example of, even though I am up like overall in the stock market and I've learned a lot within the past 2 years of trading, today is a prime example of what not to do, in my opinion. It's another example while even though I am up overall, I would still personally consider myself a break-even trader. And it's because of days like this that I made a lot of mistakes. Basically, basically two big mistakes today. And aside from looking at the setup, like I'm not too upset that I actually traded these. I'm upset that I played them with such large size and let winners turn into losers. So overall on the day, I'm sitting red about $1,392. That's the biggest loss I've had this entire year. I'm very upset about that because I know better. Quite frankly, I know better. And I'm not too upset that I did trade these. I'm just upset about how I mainly executed them because TPET, this was let's start at the beginning. First one I traded, I'm going to do a quick recap on the actual setups that I decided to attack today. There were plenty of other setups, but I'm just going to pay attention to kind of the mistakes that I made today, more importantly. And then after that, I'm kind of going to have a little bit a meditation session with y'all. And that's going to be me kind of breaking down the mental mistakes, the bigger mistakes that are preventing me from being a better trader. And today's a perfect example of those mental mistakes that are really holding me back. So we'll get into that in a second. But quite frankly, I'm not too upset that I even tried to attack either of these setups. Now, I only have the 1 minute chart, but I'll quickly go through them. JBDI, I noticed that the 90 EMA was at like 125. So I was like, you know what? If we get a break and hold of the 125, thinking that we can get extension a little bit higher to one of those daily EMAs. And at the same time, it was setting up perfectly for a 138 break. We had resistance right here. It also lined up with some earlier action. I don't have it recorded, but I was thinking getting a nice pop right here, we can probably get a move at least up to that 163 and kind of clear out some of this action. The I think it was the 200 EMA was up at like $2 or something. And I was really hoping for a push to 163, maybe a consolidated look, and then a push up to that larger resistance. But one of the mistakes that I made today is I kind of broke up my schedule. Normally, my schedule in the morning looks like sitting down to kind of opening up the monitors at 6:15. I decided to trade a little bit earlier than that. And one of the reasons that I decided to kind of shift my schedule around is because I saw the FOMO from yesterday's setup, and that was on MSAI. And I wanted to catch another move like that. That's kind of my thought process. This happened like a few minutes before I actually sat down to trade yesterday. So I was like, you know what? I got the FOMO fever, and I wanted to try and catch this earlier setup. And if I'm waking up earlier, I got to understand that I need to kind of treat things with the utmost respect for doing so. Now, at the same time, this is kind of some wiki movement. So I go into this trade not having the biggest hope for it, but I was like, you know what? This 138 break looks pretty good. If we get a slight little pop above, I'll take some profit off the table. We don't even get that slight little pop above, so I think my average was as close to 138 as possible here, and I start holding and holding and holding and holding. So right here, I know that like the 125 area needed to hold. It's where the 10 EMA on the 5 was. And guess what? I saw that the 90 EMA was down here at like 123, so I hold until 123, and I'm like, in reality, I should have with the size that I was taking. That's another big factor here. With the size that I decided to take up here, I needed to cut it as soon as possible. I mean, I let a minus $100 winner turn into minus 500 right here. Now, I'm even more upset on what I did. Sorry, I think this one was roughly minus 600. Then I don't remember what the other one was, but everything adds up to this number. I know that. Now, on TPET, this is the prime example of revenge trading. I was like, holy crap, I made a big mistake on JBDI. I need to make it up here with TPET. And I had a really good entry on this one. I had an entry down here. And I did size in very aggressively. Again, way too much size, way too much size, way too much size, way too much size. And then it turns into a really nice winning trade. And I was doing the mental math of like, I have to be green for YouTube. That's all that was going through my head. I put that much pressure on myself. If you put that much pressure on yourself, of course you're going to have a massive red day. Like you should almost expect to have it if that's what's going through your head. And I just broke some of my rules. That's as simple as it gets. This was actually about a $500 winner. So right there, I was back to minus 100 on the day. But right up here, I was doing the mental math of, you know what? If it actually gets that move up to 274, 277, I'm flat on the day. And matter of fact, it would actually be a $200 winner. So right there, I was like, you know what? I'm not going to take out any profit off the table because I want this larger move. This is greed, man. This is completely greed right here. Like I know better. I know if I follow the rules, I will be a better trader. My rules are take some off the table and then maybe hold a little bit trailing for that larger move. Okay. I didn't take any off the table here. And in the moment, I was like, you know what? If it doesn't get that move all the way up to 277, I'm going to be kicking myself for the rest of the day. That's kind of exactly what happened. I know better. Even in the moment, I knew better, but I was like, there's a chance. I wanted to be a hero. You can't be a hero. The stock market's going to do what it needs to do, and we are bystanders. We have to play the trade and not force trades and let the trade come to us. I was forcing trades and wanted to kind of be the hero and dig myself out of that red hole. Now, let's go ahead. I'm going to go ahead and kind of walk. This is going to be completely unscripted. I don't exactly know what I want to talk about yet, but mainly what I'm identifying. I've had many days like this in the past where I wake up early, try and be a hero, and uh, we're just going to start putting some like thoughts on paper here because I really want to come up with like I don't know, maybe a rule book, 10 commandments, whatever you want to call it for this trading trail. And I'm going to start tracking the days that I actually follow every single one of my rules. And when I have a big red day like this, all right, so let's start this. First, we need to identify the outliers. Defy. And what I mean by outliers are big red. Big red days. Also, to note, big green. Because not only do you need to study the big red days, you also need to study the big green days as well. So once I identify the outliers, let's be honest, today is a massive outlier. Biggest red day of the year so far, year to date of the entire trading trail so far. Now, it's only been 5 days, okay? I've had bigger red days before, but we need to start minimizing those. So, how do we start doing that? Identify the outliers. We need to figure out what went wrong this morning. And I've had a lot of time to think about it, about 12 hours, and it's just been rolling around in the back of my head. And I think what I really need to understand is this quote. I don't know where it's from, but it's a marathon and not a sprint. Hope you guys can read my handwriting there, but that's what I need to pay attention to. I woke up today wanting to be a hero. Now, I know for a fact in yesterday's video, I mentioned that it was going to be very important for us to approach the market with a cautious attitude because the stock market's going to be closed tomorrow. Rest in peace, Jimmy Carter. He was a former president. Whenever there's a death of a former president, stock market and a bunch of other things shut down for a day in memorial. So tomorrow is Jimmy Carter's Memorial Day. And I know since it's going to be a shorter trading week, you have to kind of keep into mind these fundamental factors of outside forces slowing down some of this market action. And I went in sprinting as fast as possible with large position sizing on my first trade. I'm going to run into a brick wall if that happens. And I've had many days in the past of doing exactly this. Exactly this is the reason I'm a break even trader. So, whenever I have a big red day, maybe I add a new page in here or something to kind of put a little bit more thought and organization into this. But this system of whenever I have, whenever I break, let's think this through. Let's think this through. So, we need to identify a system of if I took a trade and it was a red trade, but I followed my rules, it was still a good trade. So, if I took a trade and lost money on it and did follow my rules, maybe we add a new rule. So this is going back to those outliers. You really want to be studying those outliers for those situations. So let's bring this down a little bit. So when it's a big red outlier, what do we want to do? I know my rules, so we add a rule. So what rule should we add for today? I think this rule of it's a marathon and not a sprint is exactly what I need to start telling myself. So if we go here, all of these on the left side are all of my notes from years and years of trading. But here's something that I really pay attention to: marathon, not a sprint. So these are some of my mental checklist things that I kind of try and walk myself through before taking a trade. I don't think I've ever showed this before, but I can quickly go through all of these. So uh, before I had 5 rules, and now we just added a 6th because I had a massive red day. And I've had massive red days exactly like this before, so we need to start minimizing them. This is going to be the key to success. The less days that I have like this, the better trader that I'm going to be. I know what it takes to land those bigger trades. I know it. I've landed them before. But what's holding me back is these massive red days. So let's go through all of our rules one by one. Every time I'm going to have an outlier, we're going to add in a rule. So this is just a mental checklist for me. All of these notes are really just for me, and but let's go through these 6 right here. They may seem gibberish to anyone else, but they mean a whole lot to me. I'll try. I'll do my best to explain them. If anyone has questions, feel free to just leave a comment, and I'll try and like explain these rules in a different way. Um, but rule number 1 is, in summary, chart it up. Actually understand the action with what's the breakout, what's the closest support, what's your risk to reward, what's the actual setup. Do you understand what's actually going on? Chart it up basically means draw on it like a 6-year-old with crayons. Actually learn from the price action. If you're not charting it up, even if it's a winning or a losing trade, if you didn't chart it up, you didn't learn anything. And that's what I need to be doing, learning. Now, the next one is don't trade in the middle of the road. So, what this one means to me is I kind of go back to the analogy of the chicken crossing the road. And when the chicken crosses the road, sometimes they get hit by a car or something like that. So, what I don't like to do is trade at the top of the range. Okay, let's say that this is let's change this to a black line. Let's say that this is the top of the range and this is the bottom of the range. So this is acting as support, this is acting as resistance. If I'm trading for a breakout trade, I want to see some action like that. Now, what often happens is the price is coming up to test that resistance and then comes back down. I need to make sure that my exit, if my entry is somewhere up here for the breakout, but price doesn't actually end up doing that and it comes back down almost immediately, I need to make sure that I don't get caught holding through the entire middle of the road. I don't want to trade from one side of the road to the other. That is a recipe for disaster every single time. So I've kind of learned that. And you know what? Thinking about it, I'm glad I'm going through my rules because if we go to what's this? Trading through the entire road. Would you believe it? So I did actually break one of my rules. This is very bad. You need to keep that much tighter, especially if I have a larger entry. Wow. Now, I did kind of exit up here. I know the sell is down here, but I need to exit right at like much higher. So I don't hold through the entire middle of the road. I held through the entire middle of the road, and that's why this loss is so bad. Now, let's go back to our rules here, because that's good for me to kind of keep in mind. So if you're buying at the top of the range, you don't want to hold back to the bottom of the range. That's as simple as it gets. If you buy at the top of the range, you're looking for that breakout and that move higher. If you don't immediately get that breakout move higher, you need to be cutting with a loss as soon as possible somewhere in here, and you don't want to hold to the bottom of the range, because if you hold to the bottom of the range, you mentally you tell yourself, since we label this mentally as support, you're actively reinforcing, I can hold through this because it's going to hold us support. We don't know if it's going to. I mean, heck, it could fail as support and be a glass floor and go all the way down. So like this could be a very fragile support right here. So again, I just don't like holding through some of these support tests. It's just too risky. It's very risky. you know just because we label it as support doesn't mean it's going to hold as support. So we really want to be keeping things a lot tighter than that. Now, what is the reason to buy? Guess what? I also broke that rule today. Wow, phenomenal day trading here. So, what is the reason to buy? What this normally boils down to is, what are the fundamentals? What's that larger? Is there enough bread on the table for me to take this trade? Okay. Taking a step back away from the technicals of like, is there a good entry with risk to reward? Like, is there going to be a good breakout? Rule number three is much more about, does the stock have good news? Is there a larger catalyst that we're not that we're aware of that might give us higher conviction that this is going to be a winning trade? Are there any of those larger market ideas for the reason to buy? So when we say those larger market ideas, some of them can be actually be a little bit more bearish, like Jimmy Carter's Memorial Day and this being a shorter trading week. So right here, just in this one single rule, I broke it 3 times this morning. And let's list them out because I need to remember this. First one, all the stocks I traded had no news. I was just going off of a technical analysis. I was like, oh yeah, I'm going to be a hero. So, and I even go in with larger size. That should not be allowed. Should not be allowed. All of them had no new news. Okay. Number two, shorter trading week. Shorter trading week. And I still go in swinging for the fences. Of course I'm going to lose money. That's just how it works. Okay. I got caught asking for too much from the market. And then the third time that I broke rule number one, or rule number three, sorry. The third time would be no larger catalysts. And what this could be, like a catalyst could be many things. One of my favorite examples would be Bitcoin sympathy. When Bitcoin was reaching 6 figures, like a few months ago, when it was first ever reaching 6 figures, $100,000 for one Bitcoin, right then, a lot of other Bitcoin companies started to move very fast and rapidly. Some of the companies did not even have any news, but because sympathy, something that they're attached to, a larger catalyst like Bitcoin skyrocketed their company. Okay, we didn't see any of that, or we did today. I want to preface that we absolutely saw plenty of moves and plenty of safe, awesome, amazing moves. I'm not going to recap them because I'll just get FOMO right now. But we had some amazing moves today. But I was attacking too early. I wasn't patient enough. So this is why we're going to add that next rule of it's a marathon, not a sprint. I sprinted into the market today and I got punished for it, without a doubt. Without a doubt. Now let's move on to rule number 4. It's good to get rid of all of this crap. Maybe I'll rewrite this on the trading trail. So whenever I end up breaking a rule, we'll have exactly what rules I broke on that day. That might be helpful too. But rule number 4 is more about really fine tuning our entries and exits. Rushing and dragging, I got this. I was inspired to make this one a rule because I just got finished watching a movie called Whiplash. And there's an awesome scene in Whiplash where the instructor's kind of being hard on the student, and the student, played by Miles Teller, amazing actor, but the student is drumming, and there's apparently something called rushing or dragging with drumming. Rushing is your tempo for your drumming is too fast. Dragging means you're too slow. So basically, what rule number 4 is asking me for my entries and exits is, was I too fast or too slow? So it's a balancing act by far. Rushing might mean that my entry's too early and I didn't give that setup time to consolidate. Dragging means that I was too late on the setup and I was late on the entry. So if my entry's late, it's going to be too high, so I can't manage my risk to reward then. So you really want to make sure that you're not rushing into the setup or dragging into the setup and have some better entries. And this is just a very nice reminder to do so. Rushing or dragging, getting my average as close to a safe support area or right into the breakout. If I'm playing the breakout, if I'm rushing, that means that entry was too early and it hasn't broken out yet. So then it can dip back out. If I'm dragging, it's above the break and the most of the move is going to be over. So I really want to get that sweet spot as it's breaking out. So if that's how you kind of avoid the rushing and dragging. It's really important to me because without this reminder, I definitely would not be working on my entries. And rushing and dragging definitely pressures you to kind of get some better entries. Now, rule number 5 is kind of a tricky one to wrap your head around, but it rhymes, so I made it. But it's the saying, when candles are wicky, trading gets icky. And I wish I had a good example of this. I don't think it directly applies to anything that I ended up trading today. I mean, JBDI is kind of wiki. This price action is kind of like hard, just definitely hard to trust overall. Um, yeah. Yeah, I'll see if I can find an example sometime and I'll put it in the next review. But the saying, when candles are wicky, trading gets icky. Sometimes there's too much volatility for us to kind of, for a price action is not really trading cleanly. This is just a reminder to only trade the things that look clean. And when they look clean, entries and exits are just easier. Be patient and don't trade the ugly stock. That's basically what that one means, and wait for the nicer looking setup that's not icky. Now, rule number 6. This is the new one that we're adding today. It's a marathon and not a sprint. I broke a lot of rules today, and I'm not exactly sure why. Maybe it was just because I had too much caffeine in my system and I wanted to hit the buy button. But even when I hit the buy button, I'm genuinely not upset that I even attacked those setups. I still think they were decent enough setups to try and hit the buy button. The problem is I wanted to be a hero too early in the morning and used way too much size. I have built up so much knowledge on knowing when to size in and bring my average up in a safe way. I didn't even allow myself to try and do that today. My biggest green trades ever have always been from me averaging up in a safe manner and maybe playing it twice, but leaving some shares on the table. So when I can add to my position, I can double my position, or something very aggressive in that matter. I've spent so much time trying to practice that. The fact that I sprinted into a brick wall today and didn't even give myself an opportunity to do that is why I'm red today. And more importantly, it's because those first entries were so outrageously big. Going in with a few $1,000s, like that's just silly, especially at 6:15 in the morning. I know better. I know that's not my sweet spot or my personal preference to trade in that time. FOMO got to me, pushed me to wake up earlier, all learning lessons to continue to get better as a trader. Um, Yeah, I'm sorry if I've kind of my emotions got a little high during this recap, but being red, $1,400 is definitely a tough pill to swallow. Technically, I'm still up overall, so this loss right here is just gains, thankfully, but it still means I'm in a nasty drawdown, and it's only the first week basically of trading, 5 days so far, so we really have to get back to it. Focus and study all of our trades. And today was definitely the most difficult day to sit down and actually do a review like this. So I'm glad I'm getting it done. A lot of things to kind of study and take away from this. I do really like this new saying that I'm making. It's a marathon and not a sprint. I know I've heard it before, but this is what I need to take away, and I need to continue to kind of relax, be patient, let the trades come to me. Because I'm going to be honest, I knew better in the moment not to trade this. I knew better. Having this huge peak and then a huge sell off like this, like anywhere in this area, you're just buying into sellers that caught in that. Like, this is just ugly to trade. Ugly to trade. Where did all of this volume go? Like, it's just tough to trade. And I knew that going into it. So I'm going to make a conscious effort to sit on my hands these upcoming trading days. I want to miss them. That's perfectly fine. That's perfectly fine if I miss them. I'm going to wait for the setup that has my name on it. Yep, yep. And when it has my name on it, I will take advantage. I won't sprint into it. I will just simply take advantage. And that's all I need. I need to rebuild the confidence because this hurt my confidence today. Needless to say, being red 1400, that's rough, 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 rough. Now I've lost a whole lot more in a single day, so I mean it could be worse. It could certainly be worse, but trading is a roller coaster of emotions. Certainly not made for everyone. But if you're looking to trade, there is a great group called Sensei Trend Traders, and that is the group to trade with. By any means, I have learned so much within the past few years trading alongside Sensei and all of his other helpful blue names and ninjas in there. It's been an amazing time. So if you're looking at learning to trade, Sensei Trend Traders is definitely going to be the go-to to learn how to do that. Unfortunately, I'm still red on the day. There were plenty of opportunities to kind of get green, but again, I'm trading in the cash account. Right when I saw that minus 13, 1400, I was like, you know what? I need to close my laptop and walk away for the day. So after two trades, I was done for the day. I mean, I heard people calling out CUR or core or something, and a few other tickers. Like one ticker made 300% move today. Phenomenal. Great action. You love to see it. I just hope that this action continues and I'm able to profit off of it. Stock market's going to be closed tomorrow, January 9th. Again, Jimmy Carter Remembrance Day. And I will be looking to trade alongside you guys on January 10th. And that's going to be Friday. So Friday of the stock market, normally going to be the slowest day of the week. Now, I'm saying this, said it yesterday too, but I'm going to say it right now, so I actually take it to heart. January 10th, Friday. Friday is going to be the slowest day of the stock market. I have to approach that day cautious. Get ready for the marathon. It's going to be grueling. Embrace it, Noah. Embrace it. Let's get after it, team. Safe trading. I wish you all the best. If you have any questions, please drop a comment. Have a good day, guys. Bye.